Hello and welcome to Macro Mondays brought to you by David Gockstein. I'm your host, Landy, and today is July 27th, 2026, and we are looking at Bitcoin to start the day here. And we did get a move down off of the upper first standard deviation after another higher low was set as of Sunday's closure. So we are likely looking at the possibility, as the swing structure is already broken from last Thursday. Let's go ahead and zoom in here a little bit for Bitcoin and take a look at the areas of interest here. So the swing structure has been broken. We haven't seen a close below, but there's about 35 minutes to go in the Monday session still. And I would be aware of any kind of a swing structure that's broken. And then, of course, the other area to pay attention to, which would confirm a lower high by close today, is a close below 64,230. So that would be a lower high to a swing structure break on the of the higher low that was just set on Sunday's closure, and potentially, leading down to test the next big area, which would be at 62.5 or so, 62,452 here on the index chart. Or no, this is the Coinbase chart. So actually, let's go look at the index chart. Do I not have the index chart? Let's go look at the index chart, because that's where we have all of our stuff. You can ignore this. This was from when I was talking to David earlier today about, the higher term time frame outlook for Bitcoin on potential continuation, or what I would need to see for this area to eventually become a macro low area. If it were to become a macro low area of interest, what that would look like. And then, of course, I shared my thoughts that I've shared many times here and on various Spaces events and on David's show in the past. And that is that we're still in lower high, lower low structure. So lower high on a higher term time frame at 82,800, which was a direct retest of the previous higher low close on the monthly at 82.5. That's a lower high to lower low structure again, which we had already broken into lower low structure on the monthly. So we had lower high, lower low, lower high, lower low again. And now it's a matter of where does this low get set. So if you'd like some of my thoughts on that, I've shared them here quite a bit. I'll revisit it later this week, maybe Friday for the live stream. But in this case, I think what is important here on the daily is paying attention to, if we do get a close below 60, right around 63, 680 or so, that would not just confirm a lower high, which will confirm on any closes below, as I just mentioned on the Coinbase chart here on index, it's 64,255. Daily close below there would mark this as a lower high. And then we do have a swing structure break of the higher low structure here. If we do get a closing break, you can look down to the lower first as an area of interest, as we are in a pretty tight compression here on the daily. That's going to be right around 63,280 to 63.3, maybe even starting to come up towards 63.3 by the close today. I'm sorry, yeah, that would be 63.3. Anywhere below there, around 62.5 is what I'd be looking for as an area to test, right down into the swing structure here, 61 to 61.5 at the swing structure, and closing structure down here below 62. That would be the next logical areas to pay attention to the downside. If we did start seeing closes below there, and especially below the lower second standard deviation, honestly, a front run of that would be closes below 62.5, but I'd just be very careful around any of this structure. But closes below the lower second standard deviation would be expansion into these swings and then into the structure down here, which is essentially 58 to 60. And that would open up the lows and lower, I should say, because that is the lows. So let's go ahead and put on the support and resistance areas of interest here. And we'll get rid of the arrows just so that I can actually show you what I'm talking about here. And this is not news to anyone who's been keeping up with the Monday, Wednesday videos or the Friday live streams. This is something we've been tracking right along. this compression. Now, I imagine, I was thinking that we might get that lower second pulled up into 62.5 here. Haven't quite seen it. We do have that spike right into it, directly into the 62.5 region. This is a higher low structure, so if we do violate the most recent higher low here, look for that one to get ran. Anywhere below there, closes below the lower second, like I'm saying, 61 to 61.5 is the name of the game. Any close over close expansion, if we didn't already head down to 60, I'd be looking for 60 again, top side of the red zone. And then even past this red zone, which is a monthly red zone between 60 and 58.8, which is an important area of interest, but I'd be looking right down to 58, this red line. We had been talking about 58 to 60 well before we hit 60. Like, we were still trading in the 80s, and even on the rally up to 98,000, where the target was around 98 to 100, we hit 98. Big sell-off, we directly hit 60K, and 58 to 60K was the main zone. We did, of course, get a sweep of 58 down at 57,750. So if we do break down from this area of interest between 62.5 and 65, while there is some opportunity for the bulls to pick up below these lows around that 61 to 61.5, realistically, any close over close price momentum on expansion is targeting around this 58 to 60 low side structure. Any break of it, looking mid to low 50s. So 54 to 56 first on these weeklies down here, and then 52.5 to 54, kind of capturing that internal weekly structure there. Anywhere below there, looking to the top side of the next big area, which of course is going to be 45.5 to 48. That is the bear market lower high from 21 into the 22 bear market. That was the lower high, 45.5 to around 48, 250 or so. And then of course that's where we saw the ETF highs come in for the spot ETFs around that 48 to 50K. So I'd be looking anywhere below 52.5, somewhere in the middle between $48,000 and $50,000, which would be somewhere around here or so. We can always just throw a line down there and just call it 50 grand, so it's on there just in case. I don't think it's getting there right away, but you never know. And of course, it has to meet the conditions to even get there in the first place. So we can just throw 50K, because that is essentially going to be the area of interest, anywhere below 52.5, looking 48 to 50 down here. But Bitcoin is still in a very it's in a very important area, but it's also kind of no man's land right now in this daily compression. If we do see Bitcoin break back out above $65,000 and that upper first standard deviation, just pay attention to the 65.7, 65.8 region. Anywhere above there, good shot at the highs again. The closing high up here at 66 to 66.3, and then around $67,000 on its way to try and work itself up to around 68 to 69, but a wider zone between this purple and the bottom side of this weekly between 68 and 70 to 70,500. That of course would open up the entire weekly up to 72, and then $2,000 at a time, essentially 72 to 74, 74 to 76, with a break even there, of course, at $75,000. So pretty straightforward stuff. You can get an edge by looking at this 12-hour. If we did break down from 62.5, that would start to initiate full expansion. Now, of course, this would be on closes. If we started to do that, we're most certainly targeting these lows right here, but more importantly, any continuation would be targeting 58 to 60 down here, and potentially more to the mid 50s, that 54 to 56, with a lot of people looking at $55,000 down there. Same goes for the upside. So back above 65, the edge is back in the bulls' favor. You can start to look at the 12-hour, and any kind of 12-hour closes above that 65, 6 to 7, which is essentially this spike high right here, and then start to work its way back to the highs towards 67. And realistically, you could start to see the etchings of expansion on the 12-hour move up to 68, for instance, but you need to see close over close 12 hours that start to push past 68 and start working its way towards the 70,500 structure. More importantly, just pay attention to any kind of downside move below 62.5 on closes, close over close price momentum that can swing these lows, and then any kind of continuation down to the 58 to 60 on the bottom side. And right now, the 12 hours still pointed down for momentum, and is very highly likely going to throw a bearish divergence. So yes, definitely watch 62.5 to the downside on closes. So, for those of us in the United States, kind of that overnight session is going to tell us a lot, I believe, if this is going to hold up into tomorrow's open for traditional markets. So the Tuesday open, it's going to be very, very interesting because we'll get a 12-hour closure, obviously before market open and pre-market, and then it's really about what the market's feeling at the start of the Tuesday session. So pretty interesting stuff, I think. Now the weekly is going to be interesting because we have lower low, and we're going to have to watch it this week. Right, let's go ahead and get rid of the support and resistance zones. We'll throw our horizontal for 50K in there. And you'll see that anywhere below last week's low at 63,680 on closes this week. Of course, we will revisit Wednesday and Friday, but definitely something worth watching because we do have $56,000 likely in play if it does put in another lower high and more. Obviously, $50,000 is the lower third standard deviation for any kind of a price replace band below, the mid 50s at the lower second here on the weekly, which would be big expansion to a range look, and then continuation of that expansion to the downside. So I would just pay attention to it. Invalidation is going to be, back above last week's high. Pretty easy to suss that one out at $67,000, essentially on its way towards, 68 to 70 by the basis band. All right, let's go ahead and take a look at oil. Oh, that's right. I messed up my list order. Oh, well. Let's go ahead and take a look at oil. Had a big old gap down on the daily. Everybody got really excited, and the markets didn't necessarily respond the way people wanted. Now, there is a rate decision this week, so there's that, right? Let me go and look here. I believe there's a rate decision this week, right? We've got, Fed funds rate statement and press conference. So I would definitely be paying attention through the Tuesday session into Wednesday, how the market reacts. Now, in terms of the Fed funds rate, if we go back to last week, let's remind ourselves that when we had inflation metrics come out, was it last week or the week before now? Might have been the week before. Was it the week before? Yeah, core CPI. Month over month came down, obviously, because it's reading CPI month over month and year over year came down, right? From 4.2 to 3.5, from plus 0.5%, 0.5% to minus 0.4%. Obviously, reaction to oil coming down, right? But we saw that pretty quickly bleed through into the year over year and month over month core numbers and core metrics, which means that for this week's Fed funds rate decision, I would expect no change. A lot of people for that week when CPI numbers are coming out, it was like, it's going to come in hot. It's going to come in hot. And it's like, that doesn't make sense, right? All you got to do is look at the price of oil like down for 6 weeks straight from its highs over $100 a barrel for WTI. And it comes down, it bleeds through the rest of, the volatility is seen directly in CPI, but after 6 weeks, we saw it come through core. So we did move up in oil to the 90 to 95 level, topped out there at 93.50. And I said, pay attention to 84 to 86. If we lose that upper first, next big area is going to be 76 to 80, essentially, or 77 to 80 by the basis band, which is going to be working its way towards 80. It's essentially there. This is where we had the last kind of consolidation before the next push up. So this is the area to watch to the downside. Or else, anywhere above yesterday's high at 86.20 would paint another higher low with targets right back into the 88 to 90 and then 90 to 95 with the potential for more up to 98 to 100, right? And I talked about this for where the upper third would be on the Monday session, now Monday close to the Tuesday session. So, and that zone is between anywhere above 90 to 95 would be 98 to 102.5 with a breaker price right at around $100 a barrel. And then just pay attention to the bottom side of the red zone, anywhere below, $76 a barrel. And this could come all the way back down and start working its way towards that lower first. If it starts taking out this consolidation area, and that's right around $71-72. And you might as well open up the bottom side there at 68 to 70 again, where we did see price settle in perfectly with a gap fill. So that would be relevant to pay attention to. Traditional markets did end up green on your TradingView charts, but this is not. It's only because it opened and gapped up over the prior session. Not a beautiful candle, but we are seeing daily compression really start to squeeze now. So the criteria is getting pretty easy to understand here. You can see that it's lining up with this low over here for SPY. So essentially we have lower third. So if we drop the current lows, we'll get expansion into around 730 to 732. Anywhere below there, we're in expansion back to the lows, 720, 722 down here. Anywhere beyond that would be full-on expansion, especially close over close towards 710, 715 to swing this low. Back to the upside, pretty easy. Get above 750. Need to see close above around 751 to start working its way back towards 755, 756, this structure over here. Anywhere above there, that's expansion back to the highs. You want to see expansion push beyond 760 to 765 on a close over close basis to exit the compression, initiate expansion. Otherwise, this is in danger of falling down. We're already seeing that expansion get continuation to the downside for NASDAQ. Right. And then I noted on Friday, 29, 2 essentially is what needs to be broken. That's not where the basis band is on the daily. Continuation of expansion to the downside is going to occur. Did we hit this gap? Yeah, we did. We filled the gap just below it. So 2 gap fills back to back from the Friday into the Monday session. If we're going to get continuation, it's going to happen below, 27,785 or so, towards around that 27 to 27.3. And I would take this whole structure down here, 26.9, essentially it's 26,877 to 27.3. I'd be very aware of that zone. If it falls out of there, it's back to retest the highs with a larger correction in place. Or taking place, I should say. So pay attention to that. 26,877 to 27,315 or so. And you can see that I don't really care about organizing or coloring these charts, but this is more for your understanding of what it is and how I'm doing this in relation to expansion and compression setups. And this is expansion. So it's either got to hold this area that it's in right now, right here, to prevent falling further, and then try to take out the lower high and then run the bands to the other side by the highs. That's really what you'd want to see if you're bullish on these areas right here. Now, what I do find interesting is we do have Dow came off of the Friday and into the Monday session. Now, rejection of the lower high, but really bouncing aggressively off of that lower second standard deviation. Obviously, any closes below 51.3, just beware. A lot of people make a big deal about rejections, but traditional markets, you see rejections and then continuation. Same for supports getting hit and then continuation to the downside. So this is a compression. If it does resolve below 51,550, 51,000 on Dow, we're most certainly already running 51.3 and likely down to 51 and then 50,500 on expansion for a more aggressive push down. And then if we do see closes above 52.5, and then we need to see the criteria being met at 52,607 on the high, I would start to look back towards the highs, and then anywhere above 53, we can look for expansion to the highs, and we need to see continuation above 53 to 53 and a half or so for close over close continuation of expansion or resolution to the upside for another leg. Not necessarily the time of year that I'd be looking for it to occur. If anything, I'd like to see some larger corrections occur in, the August, September timeframe, but that doesn't mean that we're going to get what I want. And maybe NASDAQ is giving it away, but Dow is holding up pretty well, and oil's, with the gap down, if oil turns around and heads right back up, that's when you got to watch it. In conjunction with Dixie. So Dixie sitting above and pushing on towards the top side here. It's got potential for 102. And if it breaks out of this compression to the upside, 103 is the name of the game. So that's, you want to see this back below 101, right? And you'd want to also see oil coming down, and then Dixie back below 101. And then break back down below 101.40 or 140 cents here to really start getting its way down below 100 and potentially 99.60 or so. That would look better for a risk on environment if you're looking for resolution back to the upside. But if Dixie keeps gaining strength, if oil puts in another higher low and continues up, especially above that 93.50 and above that 90 to 95 zone, probably looking at that larger correction occurring right around the time frame that we've been expecting in the August to September time frame. Doesn't mean we're going to get it on exact dates. That's why I'm not talking about dates, more about structure than anything else, and resolution of compression to expansion. It's going to be pretty easy pickings, when we start to see real expansion. VIX came down to some of the relevant levels. It didn't quite hit him, no below 15. We did catch a few puts, on this last, run up at the end of June coming into July. And then it's just kind of been sideways and kind of boring and really have to pick and choose, what kind of calls you want, what kind of puts you want. It's been a little all over the place, so we've been getting rotation. So that's going to do it for me today. I will be back here on Wednesday for the Wednesday check-in. Please like and share this out there. I really do appreciate all of you that do that. Comment down below, if there is anything that you'd like me to look at. If you think that I'm correct in my assessment, if you think I'm a moron, whatever you want to say, just put it down in the comments. Obviously it does help the algorithm, but also I want to see who the hell's watching the videos. Like, I know some of you do, but only because you tell me, or we're in the chats and you talk about what I said on the video. But that would be actually, little, as X grows as a platform for this type of, media consumption, like video and live stream consumption, which it is growing pretty steadily. The metrics actually look pretty good, not just for myself, but in the platform in general. I think that they are, I think that they're moving in the right direction with some of it, and not in the right direction, but I guess they're effing around and finding out. But I think it's going to be more important, especially as my account continues to grow, which I appreciate you all. that watch, because you help me grow. But I think it's going to be more important for people like myself to know who's watching the videos and what it is that you want going forward, for me to look at, right? Like, some of you jump in chats, and that's fun, because then you ask me to look something up, and I'll try to look it up for you and take a look and give it a quick assessment for you. But, obviously Bitcoin is a good vector for looking at generally crypto markets. Obviously, there's nuance there, because you will get things that run against the market both to the upside and downside. But as we get more stock tokens and RWAs and traditional market assets on chain, more people are interested in them. So let me know what it is that you're looking at, and what you're excited about, or what you want to see me maybe chart out. So with that being said, I do appreciate y'all. And you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all that being said, Landy out. Talk to you Wednesday.